He helped advise Warren Buffett on the $10 billion Lubrizol deal. He also advised Wilbur Ross on ICG's sale to Arch Coal for $3.5 billion. Robert Profusek is a partner at Jones Day, the #1 legal advisor of global M&A deals, and he joins us to help kick off our series, The Real Deal. Mr. Profusek, welcome to Bottom Line. Thanks so much for coming on.
Nice to be here.
I was just talking to our M&A specialist, Ian Adewuya, and he was telling me it's not so much that there's a lot of money on the sidelines, it's that now these deals, people are pumping more money into the deals. Is that accurate?
Well, it's a cash environment. There's plenty of money. There's no question about that. In a way, companies did what consumers did after the financial crisis. They deleveraged, they build up cash, and they've got plenty of it.
Right now, cheaper to buy than to build?
Well, very often it is. And one of the things that's sort of perverse about the economic news of the day compared to the M&A environment is low growth produces deals. Much better, much more reliable to buy it than build it.
And we were talking during the commercial break, that would seem counterintuitive on its face, but it's not really, is it?
No, it's not. One of the things, there's a lot of macro factors. The macro environment really is fabulous for deal making right now. But one of the issues is there's slow growth in North America and Europe. There's very rapid growth in South America, Asia, and other places, so people are repositioning. And one of the things about all this cash is that it's, from a shareholder point of view, doesn't earn anything. So sticking that cash in your balance sheet, you only pay down your debt so far, people are going to buy.
Talk to me about then the M&A that we're seeing, because you mentioned Europe, but China, South America, and Africa seem to be gold mines right now. What's going on there?
Well, the growth rates are so much higher than they are in the so-called Western world, if you want to say that. We're struggling to get to 3% GDP growth here. In China, they're struggling to keep it into single digits. So it creates this growth arbitrage and lots of opportunities. And of course, it's not just M&A. Globalization is the name of the game for almost everything. So companies are repositioning to try to take advantage of that.
And part of that repositioning involves trying to enter those markets. Is M&A the way to go?
Well, it can be either directly by buying into it or even indirectly. We did a deal in the first quarter, a mining deal, where a big U.S. mining company, not the one you mentioned, bought another mining company in Ontario. And you might say, what's that got to do with everything? They were actually moving what they were mining all the way over to Asia, right through the canal and everything else. And it was a play for Asia, even though it's a U.S. company, Ontario target, digging stuff out of the ground in Canada, it all ends up in China.
Is this part of what you would consider what you call a cross-border deal? Please explain that.
Well, one of the things, globalization is impacting everything in business today. And one of the things is one company from one country buying a company in another country, and trying to make a more globalized footprint. Even though Europe is slow right now, there's a lot of deal activity coming from Europe into North America, into China, into India, into all these other places.
Well, do the top firms understand that interconnectedness? Do they understand that we are at a place right now where, as you said, you can have 3 different entities working on one deal to try to get into one market?
Absolutely. And plus, it's just the way business is. I mean, for example, we talk about energy dependence in this country. Mm-hmm. Well, in the first quarter of this year, it was the first time ever the U.S. was a net exporter of refined product. Well, they could do that because the world is globalized and shipping so efficient. So technology and transportation and everything ties the world together. It's also good for deal making.
How does the cost of shipping play into that?
Well, it used to be a significant factor. For example, a gallon of gasoline, if gasoline cost $1 a gallon, you added 6 cents per gallon of transportation cost on it, it's inefficient. When gasoline gets to $4 a gallon, 6 cents doesn't make any difference. So now we're actually shipping diesel fuel from the Gulf Coast of the U.S. to Europe, where they're short on diesel. Europe is importing gasoline back to the Northeast U.S., where we're short on gasoline. So it's a global market in an industry that used to be quintessentially local.
Yeah. You say that we can draw an arc from the discovery process in M&A back to the financial crisis. How?
Well, there was, of course, a ramp up in M&A that led up to the financial crisis, much like there was a ramp up in other kinds of financial products. It was fundamentally financially driven. You had huge LBOs, which were just replacing stock with debt, basically, cheaper debt. Today's M&A market is really quite different. It's mostly dominated by corporates. It's not financial engineering. It's tapping into globalization. It's tapping into technology changes. It's doing all those other things.
And also at this point, I guess, tapping into transparency too. Less surprises when you open up the books.
That's exactly right. And one of the things about the M&A process right now is it's very, very focused on risk. Nobody focuses on the merger agreement or the technical aspects of it, but people focus a ton on risk, and that's what's discussed in the boardroom or in the investment committee of a private equity firm. It's assessment and no surprises.
Mr. Profusek, in our last 30 seconds, we've been mentioning throughout the day as we've been promoting this series that it looks like this is in fact going to be a record year for M&A. Is that accurate?
Yep, there's been a little bit of a downturn the last couple of weeks, but it's gangbusters.
Why the downturn?
Well, I think it's just the calendar. I mean, everybody's been saying, oh, wait, we're having a big announcement in a couple of weeks. They're coming, and all of us in this business right now are just really swamped with work.
Robert Profusek, partner at Jones Day, joining us here on set to kick off our series, The Real Deal. It's a pleasure to meet you, sir. Thank you so much for coming on.